Yes.
All right, what's up, everybody? Welcome to the Friday Mastermind. Every Friday, 9 o'clock, we are here to bring in just badass people. More times than not, they are modern mortgage coaches that are just gaining market share and winning in the market. We do have one of those with us, Sosi Avila. Although Sosi's going to learn how to change his name in a minute, so it doesn't say Tim Rohn. Sosi, try to change that on your screen.
Everyone wants to be Tim Rowan, Dave. What can I tell
Yeah,
you?
Just click the three dots in the upper right-hand corner and go to
no,
rename.
I can see he's figuring it out.
Okay, well,
We do
yeah.
not have Todd Bookspan with us today because he is in Europe celebrating, I think it's his 34th wedding anniversary with his wife.
Can you believe
He's been there
that?
for
That's
like
fantastic.
9 days. What a incredible human being, great man.
Mhm.
Every time I'm around Todd, I'm a better businessman. I'm a better husband and dad. So we miss you, Todd. So it's Deborah Bird and I, the mortgage
Yeah.
industry's #1 social media coach. What's up, D Bird?
What's
Yeah.
up? Anytime I spend time with Todd, I don't know if you guys have seen that Pat McAfee episode. It was with someone with Ohio, and he's like, if you're not shitting in the shower, you're not busy enough. And I'm like, how does Todd have so many just businesses? And then his wife who runs the mortgage team and Win by Noon and exactly what to say. And he was closing on like 12 properties one day. And I was like, dude, you are Mr. Productivity Coach. Like you're on it and you still do your videos every day. Like, well done, Todd. So this
Well,
is a little hand clap for Todd.
that analogy you used is disturbing me. So I'm trying not to
Well, don't you
visualize
worry. I posted it on Win by Noon
visualize
social
that.
media account.
That's
So
I actually hadn't
y'all
heard
share
that.
it.
That is fantastic.
Yeah.
Yeah,
And
it was
by the way,
great.
if you are shitting in the shower, you are disgusting.
Hey, you know what? I'll find it and put it in the chat so you guys can watch it. And then make sure you're following Win by Noon.
No,
That
please
is
do
that is
not.
hilarious. All right, guys. So we have Sosi Avila, one of the top 1% mortgage advisors of the country. More importantly than his volume, it's the quality of experience that he gives to consumers. He's done thousands of mortgage coach experiences. He is a financial literacy advocate. He kicks ass on social media. What's up, Sos?
What's up, Bretta? I'm so stoked for this conversation. I think it's gonna be a lot of fun. I will admit, just because we're having such fun conversation here, I feel like HELOCs have been the redheaded stepchildren of
Hey, I'm
mortgage.
a stepchild.
And he's
And I have
red.
red hair.
I know, holy smack.
Well, I couldn't see the color anymore, Dave. I'm sorry.
Well,
It looks more
there was
blonde.
a day where I
Strawberry
did not
blonde.
want to lose that red, but it has faded quite a bit.
And I think this is going to be a really fun conversation. Tim opened my eyes personally when him and I connected and we saw the product, and I really love it. So I'm excited for this conversation. Thanks for having me, guys.
Yeah, it's good to have you. And then we have Tim Rohn. Hey, Tim, I have had you on the show before. Haven't you?
It has been a lot of years, Dave, but yes, in fact, it was one of the highlights early on in my career, if I'm being honest. I think you might remember that when you first launched Mortgage Coach, that was right as I was coming in. I remember being down in Southern California in a room with a small group of folks where we bought the CD-ROM and we loaded it into the
Oh my
machine.
God, you're dating us, bro.
Oh yeah, and that is how I really started and have lived with Mortgage Coach ever since. And then you and I were at an event, oh, it's probably been about 15 years ago actually, Dave, where we went out one night for dinner and you're like, man, I gotta have this guy on the call, which really it was really made me feel great. So
Yeah. So for all you Gen Zers, CD-ROM is how we used to
What is that?
download. And by the way, before the CD-ROM, it was a floppy disk.
floppy disk.
So
That's right.
so put that into whatever AI tool you use and say, what is a floppy disk and CD-ROM and when were they last used? And then you'll have an idea of just how old Tim and I are.
Yeah.
So when I met Tim, he was, a top producing mortgage advisor. He was a producing branch manager. At one point in time, he became a real, national leader at Finance of America. And I just always had tremendous respect for him because he was such a great technician. Like he really knew how to look at a consumer's balance sheet, write a credit report, take an app, and then how do we help this consumer optimize equity and optimize debt to be homeowners and achieve financial freedom. Truly one of the best operators that I've ever known or interviewed. And then today he is with Figure, which I believe if they're not number one, they're like one of the top 3 to 5 home equity lenders in the country. Why don't you just share a little bit about your current role and a little
Yep.
bit about Figure, and then we'll get into the,
Yeah,
how to
no
win.
problem. And you're right. Number one in the non-bank HELOC space. So that's pretty exciting for us this last year. And it is important to understand about Figure at its inception. It was a direct-to-consumer channel. It was a concept. It was a way to quickly digitally connect homeowners to very quickly be able to access their equity. That then expanded to partnerships with Figure, right? Retail, wholesale, what we call Figure wholesale brokers come directly to us in some cases. And it was at that point, I was still at Finance of America, just before the wheels came off the bus over there. And one of the gentlemen I worked with had already gone to Figure and said, we need somebody badly that speaks LO. And they reached out to me because now all of a sudden the model changed. There's a big difference between a direct to consumer environment versus a partner environment. So as an example, Figure starts off, their client was in fact the homeowner. Today, I like to think I'm pushing for this hard. Our client is in fact the loan originator. And there's a real difference there. So currently about 75 to 80% of all of Figure's business is partner derived.
So that's beautiful.
So just in the last year and a half. So that's pretty exciting. So that's what I do. Love, we work with new partners that we onboard, our existing partners, myself, and I have a small team around me. Dave, you met them last year at an event we were at. We do a lot of trainings and engagement, and really, how do I want to say it? It's not so much product driven for me, Dave. It's process driven. And this is why I love using and adopting MortgageCoach into this, because I love telling originators, think process, not product. In other words, the process results in said product, whatever it might be. But if that process is right, and if you understand how it helps you save time in a day, well, then you win. Even in the case that, and I'll pick on our process for a minute, if a loan originator tries to see if a borrower qualifies for a HELOC in our system, and even when there's no offers, it's actually okay. And why would I say that? It's okay because it took you, the loan originator, 2 minutes. Shift gears, move on, come up with a new strategy for your client versus the traditional process of submitting virtually any loan, or certainly HELOCs, is checking rate sheets, calling an account executive, reaching out, submitting a full loan file, closing cost after closing cost, disclosure after disclosure. That is what we've solved for. Sosi, you said a minute ago, Sosi and I met last year. By the way, they're our biggest partner, so hats off to them. Like, they are crushing it with HELOCs. So make no mistake, the opportunity is real. Well, interestingly enough, when you go through that process and learn how to use that, what we call our inquiry tool, that sets the stage for everything else. And again, it's actually okay if it doesn't result in offers, because it only took you 2 minutes. So that's what we love focusing.
So here's what I want to do. Sosi, you came up with the headline. Like, originally, I was going to make the headline of this call, how to optimize equity. And then, I don't know if I was going to say with HELOCs, because I was going to keep it more broad. But then you said, Sosi, so the headline guy, it said the most underestimated and overlooked loan tool in your belt. So why'd you come up with that headline, and what are your thoughts there, Sos?
Yeah.
And by the way, Jeremy Forcier.
J-Force.
Right? I
I
love
forgot I did that. Let me put that back.
Wolverine.
Wolverine.
Sorry for anybody who's just joining in. They were joking on me because I had the wrong name. So I just thought I'd, add my hero's name in here. All right. So the thing for me, right, is I used to have to try to sell against HELOans or HELOCs because we just didn't have them. We didn't have anything that was viable. And so I just thought, oh my gosh, this isn't the right product. And then, and then when I started learning about them more, I started going, well, you know what? Shoot, like, HELOCs are actually a great product. And even if I don't have it, I need to tell clients where to go get them. And I'd start like referring out HELOCs like crazy. And it was never a big part of my conversation, but it definitely was something that I saw viable and important that I started connecting out. And then when I met Tim, he showed me how to do the product with partnership in him, and absolute game changer. Here's what I mean by game changer. So many of our clients right, have an extreme amount of debt. If you're at the Modern Mortgage Summit, you heard me talk about how much unsecured debt a consumer actually has. And when you look at that, they have so much equity that can give them freedom in life that they just kind of stay there, and no one shows them that, the keys to unlock the jail is just like a foot away. And our job as proper mortgage advisors, whether we benefit from it or not, is to help them look at the keys to unlock where they're at and get into a new stage of life. So I say it's overlooked because I think intentionally, since it's not a product a lot of us have had available in the past, we don't even give any attention to it. And I say it's underutilized because not only does it become a tool that doesn't help that clients never get access to, but it also becomes a tool that us as loan officers and marketers, especially on the self-gen side, forget we get to use and market. And here's what I mean by that. I believe that one of the main regrets we should have of the last refi boom is that we put clients in a low rate without understanding if they were going to be in the house a long time or not. And even right now, the fact that I get a market to clients, hey, let's get out of your debt by a 5-day HELOC, even though not all of them do the 5-day HELOC, my marketing of it allows a conversation to now open up and go, are you in the home that you want to be in? There's two ways to pay this debt. We do a HELOC, or we sell the house, pay off the debt, and buy another house that you're going to be in long term. And the monthly budget of that house is actually close to the debt and the previous mortgage that you originally had. The conversations I'm opening up by having a new tool to start the conversations are huge. So again, overlooked in the sense of many of us didn't give any attention to it because we didn't have it, and underutilized both in the sense of helping the client with it, but also helping the conversations with it that get started into even more transactions.
All right, here's what I want to do. I just finished doing a podcast with Bruce Gerke, who runs intelligence for JD Power for lending, the lending intelligence group. Super sharp guy. When this podcast hits, I'm going to try to get it pushed out by next Tuesday. It's absolutely a must watch for every mortgage executive and loan officer, because there's no one that does a better job of surveying for customers' expectations than JD Power. And he really went through, what does today's customer, that will be the headline, really want from their lender and their loan officer. And to me, one of the biggest takeaways is, and there were about 4 or 5 things, and I'll be writing about this on LinkedIn. But one of the things was they want to be contacted by their loan officer more often when they can save money or it has benefit to them. And so, like, even went to say, like, hey, if you're just like sending out journeys that aren't relevant to people, or you're sending emails to people in your database, you're actually becoming noise, and you're suppressing yourself, so that when you really have a reason to reach out, um, they've either unsubscribed, you're going into a spam folder, or they're just tuning you out. So it's like all about needs-based, needs. And so he really validated that we've gone from a shift to speed to lead to speed to need. And so here's what I want everybody to do right now. Sosi mentioned a couple needs that HELOCs speak to, but I would love this community, including you, Sosi. I want you to type into chat right now, and let's create a list of all the needs that a HELOC can address. Like, hey, buy before you sell. That a lot of people want to move up, but they don't necessarily want to sell their home before they move up. And a HELOC could help them buy before they sell. So that's a need. Let's really quick, guys. Everyone and anyone can answer this. Tim, you can answer it.
Yep.
Let's get this. By the way, Paul, my wingman Paul, will make a document. Collect these, Paul. Just copy, paste, and we'll get a Google Doc. So we'll have a list in a place where you can just all copy and paste this by the end of the call. So what are the needs? And so far, no one's typed in anything.
Real
Come on,
quick,
guys.
can I ask a
Oh,
dumb
debt
question?
consolidation. Thank you, Jeff.
Is there any rules on guidelines of how you use the equity? Like, could you gift it to a child to get them into their first home? Is there any regulations around that? that I may not know?
Well, from an agency perspective, I'm trying to think about that. On our end, no.
Okay.
We don't care what the homeowner does with their money, but on their next forward loan, from a gift perspective, Deborah, you ask a great question. I think I've actually had borrowers do that over the years.
Because
Access
that's
the
something I see for the first time home buyer who their biggest hurdle is, getting their first home. And if the parents are sitting on a bunch of equity, I
Sure.
mean,
Yeah.
Yeah.
So
Oh,
guys,
okay.
let's read this. So we got debt consol, pay for daughter's wedding, down payment, build an ADU,
That's a big use case.
college student, debt consol, uh,
start a business.
protect liability, gift to children, new investment, um, help Kaiser doctor refinance their Kaiser second, trip of a lifetime, a wedding. That's an expensive wedding. Start that dream business, right? Pay off credit card debts. Um, an investment opportunity, um, emergencies, a Lambo. Yeah, you can get a Lambo with enough equity. That's an expensive Lambo. Probably not. You know, help pay for parents' retirement. All right, guys. So first of all, keep those needs coming. I would tell you, like in terms of my opinion on one of the most valuable ways, if you're local referral based mortgage coach and you want to help realtors sell more homes, uh, there's a lot of people that want to move up. They qualify to move up. They could move up, and getting out there with agents and going out to, like, let's just say first time sellers, people that bought a home 3 to 7 years ago, they all have a lot of equity, and some of them have had a new kid or they've got reasons and they want to move up, and so I know realtors would dig that. Sosi,
Dave,
what do
I
you
can
think?
add to that. I
Go
can
for
add to
it.
that, Dave, if you don't mind.
So
Last
mastermind,
year,
speak
yeah,
up.
last year I was invited out to a very large real estate company event in Reno. They have an annual awards banquet, and I was asked to come and teach some classes. And so I thought, okay, they had a small mortgage company too. I'll just go ahead and set up a figure booth, do some HELOC training for the small group of LOs. But something happened very interesting. There was over 800 real estate agents in attendance at this event, and they were lined up like crazy. A lot of them even attended our breakout session training, and this caught me off guard a little bit. And it's a really valuable point that you just made, Dave. If they have clients that bought homes 3 to 5 more years ago, right, even when they're in that sub 4% mortgage, here's what the realtor said. They said, we love this because it's an opportunity for us to get back in front of our past database and have conversations and quickly get them answers to what makes sense for them. Can we now show them how to buy a vacation home or an investment property? Is there a way to maybe use that to consolidate their debt in preparation of their next forward purchase if they're upsizing, downsizing, whatever the case might be? It actually, and I've been doing this a long time, as you know, Dave, it actually caught me off guard a little bit how much interest realtors had in this. So in fact, I just did some video content that'll be posted soon on this topic. Like, don't think about just your database from a client perspective. Think about your database from a referral partner perspective, because it's
Boom.
a
Boom.
lot of,
I
yeah.
love that. By the way, you said I'm going to have some content posted. Is that like on LinkedIn? Where can
LinkedIn,
people
yeah,
follow you?
yeah, LinkedIn, and then of course my Instagram, which you had it on the thing. Learn more with Tim.
So guys,
To
if you're getting value from Tim, make sure you follow him on LinkedIn. Make sure you follow him on Instagram. He's pure gold, pure value. He's got a podcast. Make sure you follow him. Super good dude. Sosi, you
Yeah,
are,
man.
a baller mortgage originator. So why don't you share from the trenches, what are you doing, and what do you think other loan officers should be doing more of?
Yeah, guys. So to reaffirm everything we're talking about from a marketing standpoint, lean into it. Like I just opened up a new relationship with a builder of 75 units a year, all because I started the scripting with a new potential realtor partner that I had a lead for that I sent out of state with, hey, I'm a listing lender. Let's talk about how we can help convert your sellers on the fence who don't want to sell before they buy, and what strategies and products we have to make that happen. All of a sudden, boom, new relationship opportunity. She's so in love with what we're doing. She has a partnership with the new build lender in her local area in Tennessee, gets us connected there. I pitch all the stuff to that builder and do open door of commitment. Hey, we want to use you instead of the other guy. So this type of focus is something that we really need to look at. And don't miss the two parts of it. It's a focus to help people who are already at the place of where they want to move and they want to move now. And it's a place to also help those who want to move later, but they don't know they need to move now. And all they have right now is debt they need to consolidate, and a really good advisor who will show them, don't just consolidate the debt, leverage into the next property you're going to plan to move into 3 to 4 years from now, and save by the buy and refi strategy in comparison to just waiting. So all that said, I do want to give some tactics here. Lean into the marketing, do what you guys do, make new open opportunities for yourself. These are just tools to open up those doors. But let's go into some of the tactic pieces here. I know that there's some guideline trolls on social media, not here on Zoom. So I just want to kind of clarify some of the pieces. Figure does have an option where when you go into their portal, you can click home is listed, and you can truly do a HELOC for a house that's listed. So you don't have to worry about any of that type of mortgage fraud, right? We're all high level producers here who want to protect our licenses, and we're not doing anything weird. So Figure does have that. So be aware of that. Second, if you need the departing residents to not be included in the new purchase, there is something called, and Tim, I don't think we've talked about this, but there's one of our other partners at Fly Homes. There's a guaranteed backup contract. I'm just going to share this on here. It is an amazing tool where your departing resident's debt gets omitted with a $2,500 fee. So I won't go into all those details, but there's so many tools out there that if you leverage the right strategy, we can help clients help themselves with things they didn't even know or realize that they should be helped with right now.
So I'm going to be sharing this list in a minute. I do, as Sosi gets ready to like rattle off ideas and strategies, I want everybody to just connect with this data. So guys, this is the world right now. There's never been more debt than there is in America today, both mortgage debt, student debt. There's never been more loans against 401k programs than there are today. So like debt is a real problem. And then guys, before COVID, every mortgage was over 4% in America. Now, 63% of mortgages are, 2%, 3%, 4%. And so, that's creating this lock-in effect. Equity has skyrocketed. I mean, it's literally exploded through COVID. And just to put this in perspective for you, for like as long as it's been for 4 decades, for anyone who doesn't know, 4 decades is 40 years. So forever, this is home equity, this is mortgage debt. They ran pretty close together. And there was a little bit more equity than mortgage debt, minus the meltdown, like just a catastrophe in America where actually, we went negative. Guys, put this in perspective, how much equity there is in America right now. Like, and what we're talking about are strategies to optimize this equity, just this massive opportunity in America right now. But here's the deal. You have to be someone, loan officers can't do this. You got to be a mortgage advisor, a data-driven mortgage advisor, where you're really helping manage the balance sheet for a consumer. So there's all this equity, there's all this debt. How do we get smart at optimizing it? So I just wanted to put some data around what we're talking here. So I know one question we're going to want to hit at some point. Thank you, Don, for that question. But he asked, how can we use MortgageCoach to promote and drive business towards HELOCs and Figure? By the way, I as much as I love Tim and respect Figure, I want to make sure, like, guys, there are other, like, what I'm an advocate for is no one lender, no one tech stack. What I'm an advocate for is that you as a mortgage professional understand the loan products that you have, and then you know how to recommend the right product at the right time to a consumer to help them optimize equity, optimize debt, so they can be homeowners with financial freedom. Like, that's what we're doing here. So Sosi, if there were like 3 top strategies that you're either doing most or that you advocate doing most, let us know what they are. And then Tim, I'm going to come back to you to validate that or add to that. And then let's go into, hey, how can all these people with mortgage coaches actually use that as an advantage?
Yeah, I'm gonna share this to all my retail brothers and sisters out there, right? Because I think in my mind it was one of those things where like I just didn't look at it. I've always been such a purchase heavy, focused, referral based loan officer. I didn't realize it until I started being around a different group that was focused on debt consolidation, right? Like even for our team here, partners here with Tim at Westcap, like we did 78 million last month in
Last
figure
month.
loans. Like what that means is there's that many people who have that much debt that need to be freed from it. So I share that not to, boast about numbers or anything else like that, but I share that to just show and push on that pain point that Dave just tried clarifying. The necessity, the need that your clients have for debt consolidation is much higher than many of us realize. There is,
So see, on that, what would you say number two for those? Because that's quite a bit of equity loans. If most or majority are using it to pay off debt, what would you say the number two category? Like, is anything about renovations or putting in a pool or um, anything else
Are you
that?
trying to lead him by telling him, are
No,
you trying to lead him?
no, I'm just curious. I'm really just genuinely
it was my
curious of
next
those.
point. Uh,
It's the
no,
number
but
two
you're,
use case, I'll tell you, for us, Deborah. Debt consolidation is number one, about 40% of all of our transactions right now. And number two at 35% is renovation.
Mm. But that makes sense because they could try to make it work because they have a low rate on their home. So how do you re-fall in love with the home?
Right.
You
Yeah.
know.
So you
Yeah,
Just
said,
was curious.
by the way, let's have Tim net that out because I mean you got the data, bro.
Yep.
So you
Yeah.
said 40% debt consol.
Yep.
Write that
35,
down, everybody. We'll put that in this
35,
document. And then what's the other percent?
35% renovation.
And then what's the other, like, what are the other reasons?
Trickles down from there. Basically, think of it like bridge loan for their next forward purchase is the next, and I'll have to get you the exact numbers on that. And then other than that, it just kind of runs off the chart. The two biggest.
Okay, so
loans.
those are the three. Bridge. But I just want to make the note, guys, bridge loan has the most value to the realtor. But all right, well, cool. Let's focus on
well,
those three.
and this is where I would, on that second point, right? Like the tool is one thing, the craftsman is something different.
Mm-hmm.
Right? When you get to show somebody, okay, you're married to this low rate, you don't want to leave it, don't just rent it out and be cash flow. Let's look at making this into a triplex, right? The best cash flow in California is an SFR that gets an ADU conversion and then a junior ADU on top of it. You can create a triplex from your property, right? And then from there, we can build out for exits. We can look at tax strategies, all the rest, or we can do bridge loans. So do know that this tool or any tool like it, again, it's just a tool. The craftsmen that you and I, we're the reason why AI won't be able to replace us because we get to think of new opportunities that both market to our realtor partners and help them in their databases, but also help us really show our skill set by creating an actual portfolio for our clientele.
Now, would this be a tool for divorce attorneys if you're buying out equity in any way?
Absolutely.
I've used it for that too. Yep.
Okay.
Yeah, and this is a really fun thing too, right? And Dave, I don't know if you want me to go into too much these topics, but one of the things that I tried sharing with people too is, keep in mind, especially in California, right? If you have $1 million house and you have a $600,000 loan or a $500,000 loan and you're super proud of it, be one car accident away from a paralegal searching your home information, seeing you have $500,000 of debt and targeting you. If you have HELOCs, if you have lines of credit, you at least have another shield that helps people not know what amount of debt you have on your house and gets you another layer of protection too. Obviously, you want to do trust and all the other stuff too, but this is where these type of products come into a really good financial planning standpoint.
And by the way, for the 83 people that are live on Zoom right now, I just put in notes a link to a Google Doc that you can comment on. We're not giving you editing privileges because I've done that before and people screw it up. But you could comment. You can put a little comment. We could add things so that, we've got a nice little taking action notes from today's call. If you're watching this in YouTube, We'll have this down below in the show notes. So anything that we think is just a key concept or something that would help you take action on today's mastermind, we're adding it to the document. And again, feel free to make a comment. All right, keep going, bro.
So I'll give some tools here out of my tool belt to help y'all out from a tactical standpoint and a loan officer standpoint. Some tools that you should have saved in your bookmark is Rentometer, right? Or Rentometer, depending on how you want to say it. Air DNA, right? Because when you start looking at, okay, if we have this home, this departing residence, what's our cash flow? Once you identify cash flow, then you can identify new debt. We do cash out as long as the tenant's rent still pay for it. Should we do the HE loan? Is that still going to give us the cash flow we're looking for? Let's look at AirDNA rents. If we decide to just rent out one of the 3 units now that we're going to create, those are some really cool pieces. Again, that guaranteed backup contract is super clutch to be able to help you leverage from one home to another, so you don't have to qualify for both home purchases. And those are just some of the tools there, to name a few. I will share one of the cool things about the Figure product is, depending on which loan type you select, you can have up to 5 years of redraw, right? So you can pull out the money, pay it down, and have up to 5 years of redraw that money, susceptible to current market rates at that point, but it's a fantastic tool of freedom for a lot of our clientele.
Love it. Love it. Well, we're at the halfway point. I do want to make sure we put, by the way, those links are in chat, and those links will also be in the document. So thank you for the Rentometer and the Air DNA. That was a cool little hack for everybody.
We put a link for that CD-ROM thing you were talking about.
Yeah, you got to do your own little. I use Perplexity.
That might not even come up in Google.
Yeah, no. Let's see what Perplexity has to say. What is the difference between a CD-ROM and a floppy drive, and what year were those used in? And by the way, guys, if you're not using AI daily, get on it. That's what modern mortgage professionals do.
I just wish it was around when I was a student.
Yeah, so
so
floppy drives were introduced in 1971. CD-ROMs emerged in the early 90s. So little FYI for everybody. So Tim, how are you using Mortgage Coach when you train, Figure partners? And then why don't you kind of cover that? And then Sosi,
Sure.
Why don't you come behind it with how you use it today as an operator?
So a couple things, Dave. One, I definitely get to the Mortgage Coach part, especially as a demonstration, how to compare different models. But I think it's really important to highlight, myself included, in this mortgage industry, the traditional answer we had when coming up with HELOCs would be, yeah, I don't do HELOCs. You know what? Call your bank, check with your credit union. And I literally broke that down to understand why is that. And so these are the conversations we have with our partners. And if we understand that the why loan originators don't do HELOCs is because it's a full loan submission, it's opening escrow, it's a full appraisal, it's closing costs, it's disclosures, on and on and on, right? And it might take 30, 45 days to close for little or no compensation. And as an industry, we've trained ourselves to go, yeah, I don't really do that. So I want to highlight a couple things which we highlight with our partners. Okay, I get it. You don't do that. I've heard loan officers over the years say, I don't do down payment assistance. I don't do HELOCs. I don't do reverse mortgages. What I want to encourage all loan officers to add to that sentence is acknowledge it's okay if I don't do those things, as long as I acknowledge my clients or my competition will. See, it's really, really important, and it's a point I like to drive home, even with our partners, is if you're not going to do HELOCs, the market and the numbers will show you they're going to get done. And my biggest fear as a loan originator, managing my database and my clients and referral partners, is if I purposely send that borrower elsewhere for a product, have I in fact sent them away forever? See, it's one of the things we haven't touched on yet, but this product actually is potentially a great retention tool, right? So sure, today they're adding a HELOC to take care of debt consolidation, whatever the case is. But when and if interest rates come down at a certain level, you will have a built-in refinance retention opportunity. Does that make sense, Dave?
It does, and I want to put a little gas on that fire. Rocket Mortgage, I don't know if anybody's heard of that company, but
Oh yeah,
they're kind of like, they got a big brand in the mortgage space. They want to become Apple of
maybe.
mortgage. And if you look at their annual reports, and I could probably Google this right now and ask them what their customer retention is. It's insane. And part of their strategy is doing microtransactions. Like they want to do credit lines. They want to do it's part of why they're about Redfin. They
Mhm.
want to be more valuable more often. And so, guys, if you want to optimize retention, I mean that's what the biggest brands in the world are doing. And there's no reason if you're local, you're referral based, you could play the game. You could do it because there's companies like Figure. Someone mentioned Spring IQ.
Sure.
There's a lot of ways, whether you're a direct lender, distributed retail, or you're a broker, that you can't do these. And Jeremy Forcier, talks about you want to be a client for life loan officer, then you do refis because that's how you get retention and you get referrals.
Dave, just
So
so you know, their client retention rate was 97% for the last 12 months.
wow, wow,
Yeah, yeah.
wow.
I think that might be right. I thought it was 93. But hang on.
According to
Wow.
Google, it says ending December 31st, 2024 with the company believes is unmatched among mortgage companies. So
Hang on.
97% for the 12
What
months.
is Rocket Mortgage's most recent customer retention rate? Let's see if Perplexity agrees. But oh my God, 97. Okay, crazy.
Wow.
I thought it was 93, which was still a big number.
Why ever doubt Deborah? What were you thinking?
You
I mean,
know,
Yeah.
I
It
wonder that
just
all the
seems
time.
like such a crazy high number. I mean,
It is.
93 is high too.
Yeah.
so Dave, now that I've said what I've said, you asked the mortgage coach question. So how do I then adopt that to demonstrate this to loan originators, mortgage advisors? So there's lots of different use cases, and I'm a big proponent of living in a world where I don't make the decision for the borrower. My job is to simply make sure I show the potential borrower what their options are and give them enough education for them to make the decision, right? This is why I love Mortgage Coach so much. So I'll give you an example. You showed a chart a few minutes ago that showed how many loans are sub 4%, 3%, all those numbers, right? Make no mistake about it, the data, market data absolutely shows that people are swallowed up in debt. Again, number one use case, but there is a need for cash. And whatever that need is, you're speaking to your past client, or they have called you and said, listen, I need some relief, or we want to buy another home, whatever the case might be. I then encourage loan originators to use Mortgage Coach, go in and say, okay, here's your current loan. Here's a cash out refinance. Well, as we'll all agree, the cash out refinance, one, you're going to be capped at 80. There's going to be a lot of FICO requirements, or roadblocks there potentially. But the loan level price adjustments, well, honestly, they're just egregious if we're being honest in agency loans. So I just did this the other day as an example, and just yesterday, and the interest rate was 7.38%. They're at 3.5, going to 7.38. It's a massive uptick in payment. Now, maybe it makes sense depending on how much debt they are or aren't paying off. I'm not here to make the decision one way or the other. But then I added another column, and I encourage loan officers to do this. Keep your 3.5% mortgage, add a line of credit. By the way, the blended rate was under 5%. So I love having conversations around blended rate. And if I'm being honest, so many of us in the loan industry maybe came through the industry at a time where we didn't really have those conversations. So I want to encourage everybody, think of things from that perspective and think of things from the perspective of strategy. So now you've presented these options to a borrower, you've walked them through, and maybe even keeping your own opinion out of it, right? I believe to my core, when you're doing that, you win. No matter which of those options that borrower of yours chooses, you win. You were the one that showed them what their opportunities were. And so that's what I try to encourage with our loan originators and the ones that we have using Mortgage Coach, like Sosi here. In fact, there's other folks in Sosi's building that are just now getting fired up on Mortgage Coach as well. And it is an incredible presentation tool. That's the key. Dave, you made a comment early on in this call. You said, yeah, you do your loan application and you're having a conversation with your borrower and you go in and throw some scenarios together. And I've worked closely with Jeremy Forcier over the years as well. And I learned something very interesting. And Sheldon and I both did this. We actually don't start with a mortgage application. We start with a total cost analysis based on the conversation we had with a borrower. And it's very, very important because it almost, I can't guarantee this, but in our experience, it virtually eliminates shopping. So you have a conversation with a borrower, you find out what their needs are, you come up with a couple of different scenarios and you send it to them. Listen, it was great talking to you today. As a starting point, here's a couple things that come to mind might be a good strategy for you. The next step is to click the link and complete my application. You see the difference? It's a front-loaded presentation that then leads to an application. Now, it can be done both ways. I'm not here to say one's better than the other, but I love encouraging loan originators to think about that from a process perspective. Remember, process equals product.
And by the way, process, the way Tim just described it, equals trust.
Yep.
And speed to need equals speed to trust. And when you listen to the interview with Bruce Gerke, trust wins. Trust wins. So before we have Sosi share a couple TCAs, and I would love you to, I put a link to this. So I asked Perplexity, how does Rocket retention compare to the industry? So first I asked, what is their retention rate? 97. And then I clicked on a little prompt. How does it compare to the industry? Guys, the industry is 20%. Like, guys, we're talking almost 5x better retention rate. And so, by the way, what that should tell everybody on this call, you're leaving a lot of loans on the table. Most loan officers lose a lot more loans than they close because, one, they don't deliver the trust experience that was just described here by Tim. They're not, what are your needs? Here are some strategies. Here are some options. Here is some transparency. Here's how you can build wealth with real estate, speed to trust. And then they're not using data to get to the consumer soon and being proactive with needs. And so guys, we got 18 minutes left. Sosi, why don't you show a TCA, and then Tim, you be ready to show one. Deborah, if you have any ideas on how they could kind of take these ideas and one-to-many them in social media, it'd be good to, like, let's help them close some loans this week, and let's help them market on social media how they can close some more loans.
Yeah, once I saw Tim's TCAs, Dave, I think Tim's TCAs are best to look at. A lot of mine.
Then you pull them up. Then
yeah.
Tim, why don't you pull them up?
Yep.
Walk us through it, and then have Sosi give color. And
so I'll throw in two things as he does that, if that's right, Dave, because you guys are bringing up some really good talking points, especially these equal type of statements, right? One of the things, especially being as Rocket Mortgage's #1 broker partner, like, we do a ton with Rocket, and I love seeing their strategy. And one of the things that I've enjoyed with them is they continue to show there's people out there looking for information. And I want to be really clear, guys. Not only are there people out there looking to consolidate debt and they need freedom, but there's people out there who are curious too. And I think a lot of us have just sat on our hands and we're missing the opportunity to get in the game. So promotion equals prospects. And this tool with Tim is going to be a really great way to promote and get more prospects. I'm going to give you guys two more client testimonials here that have really helped me with this.
Just to add on to that real quick is I would see posts all the times about how much equity, the average American has and how much it's grown. And I'm like, but what does that mean to somebody? Like, a lot of times we hear equity has grown and maybe we get that report, but to the average consumer, like, they don't know how to best leverage it. Should they leverage it? Like, so just be thinking about that with every post that you make, is like, why does this matter to my audience? And how do I dumb it down, so to speak, where it's easy for them to digest and to put into play if it's a potential, solution to one of their needs. So just wanted to inject that real quick.
Deborah, I love what you just said there. And I'll just share with you, and I've had these conversations with borrowers myself over the years. And here's what's really, really interesting. You made the comment, sometimes we need to dumb it down for the homeowner, right? And it's really, really true, because they hear equity, but what does that really mean? But when you can have a conversation and point out, and you can ask the question, is your equity liquid? In other words, you have $300,000 in equity. Could you go spend it? All of a sudden, a light bulb goes off and goes, well, wait a minute. It's not liquid. So when you can start having a conversation like that, now all of a sudden you've dumbed it down, like you said. You know what I mean? Like made it feel real to that homeowner. Like, oh yeah, that makes sense. By the way, that equity today might be 300,000, but what if something happened and now it's 200,000?
Or you lose your
see what-
job and now you don't
right?
qualify to pull
Yeah,
it out.
it's yeah. So anyway, so Dave, I
Okay.
can share this
I'm going
report
to share
here.
those two stories real quick though, because
Yes.
I feel like they'll be impactful for
Sorry.
loan officers, right? So loan officers out there going, I don't really know if this applies to me. So there's two scenarios. One, I get a phone call on a obviously Saturday night. Sosi, we found a house. We want to place an offer on it. The realtor's calling me because it's a partner. It's a past client of mine. They love me. And now all of a sudden we got to figure out how are we going to make this concurrent deal work in a moment's notice on a Saturday night, right? So I do all this work. I create the scenario. I find a solution because that's what we good loan officers do. We place the offer. Offer doesn't get accepted. What do we do then? Typically in the past, I'd just be like, all right, like, let's see what happens next. After it didn't work out, I did a debt review and I saw that they had about $30,000 of credit card debt that, and one personal loan in the mix of that, that we could have easily taken care of with a lower rate HE loan through Figure. And we're able to do a Figure loan within 7 days it funded. They paid off their debt and they improved their livelihood right there and then from, I think it was like $250 a month. Then we added that $250 back to principal payments and they're going to be credit card debt free in just a matter of years. So they could even be better prepared for when they decided to find that dream house next time. So that was one scenario, which I thought was great, right? Because typically we put in all this effort, we get no compensation. There was at least a little bit of compensation for being able to help them with that service. Second, I was doing an equity analysis plan or annual financial review with one of my past clients, and they're like, "Hey, we're going to be moving into Tennessee, probably the next year or two." Okay, cool. Tons of credit card debt. Your credit score is X. If we just sit here and wait until you're deciding to move, maybe your credit card debt will come down a little bit, but your FICO score is still not going to be as high as you want it. Let's consolidate the debt. Let's get your FICO score up, and then let's look at trying to do any other things after that. If you want to do a different type of HELOC or whatever, right? Let's do that. We ended up consolidating the debt. 6 months later, they found their dream house and they had the high FICO score. We're able to help them buy the new home out of state, sell this one. We got it back to our realtor partner. We found a new realtor partner for the referral on the new purchase, and we were able to do another loan for them in that way. So when you have more tools in the tool belt, craftsmen can truly create a lot of success in the most challenging markets. Like we are thriving, guys. Like last month, 7.9. This month, I'm at about 7.2 of fundings for my personal production. And it's because I have a tool for every scenario. So can't encourage that enough. Get your tools in because it is a really fun time for craftsmen in this industry.
I want to add something to what he said. Sosi's winning at scale. I mean, first of all, he works hard. He really cares about people. He understands the needs of those consumers. He has the products. By the way, there's a lot of people on this call right now that so far check, check, check. But he's also able to present his options. I took a note on the call. This is the guy who runs mortgage for JD Powers, and he says showing is better than telling. And how do you make the data come to life? Like guys, if you cannot make the data come to life for the consumer, you can't win at scale in this market. Dan Keller at the Modern Mortgage Summit said two words that I don't know how many times I've used them since then. Are you getting people financially fired up? And guys, you can't get people financially fired up and clear if you aren't showing them, if you're just telling them, and if you're not making these loan programs and this data come to life. You can't. So it's never been more important that you go from loan officer to modern data driven mortgage coach. And so some of you that are on this call right now that like you have mortgage coach, but you're not using it with every credit report, or you have it, but you're not using it for every conversation you have with the consumer, so you can show them, guys, you're losing loans, you're losing trust, and it's time to get on board. So Tim, show a TCA and just walk us through one of these, so they anybody that doesn't know what a mortgage coach experience looks like. They know what it looks like from you.
Okay, here we go. This is just a quick look, and this is a scenario that we talked about just a little bit earlier in the call. So borrower currently has a 3.5% mortgage, but they have a cash need. Again, that's a real deal. And here's a cash out refinance. This is where most of us as loan originators default. Okay, no problem. Let me price it out. And I did this. You guys can all do your own pricing. I'm not here to debate pricing one way or the other, but the rate, and this was lender paid compensation, came out at 7.375. And you can see their payment was going to go up $1,200. Now, depending on what they were going to do with that 91,000 cash, maybe that makes sense, maybe it doesn't. But what if they kept the 3.5% and added a HELOC behind it? Look at the blended rate, 4.9%. It's way better than that cash out with the loan level price adjustments and everything. By the way, their cash out is slightly higher because the costs are lower. There's very few costs involved in that HELOC versus doing a full agency refinance. And I just want to point that out so that you guys all see it. But here's what I love about presentations like this. Again, it's not for me to decide for the borrower. It's for me to give the borrower what their strategies are and what might work, how each one works, that type of thing. And even if the borrower chose, even against your opinion, chose that 7 3/8 number, here's what I can promise you. That borrower trusts you, not just today, but forever, because you showed them more than just one thing. And you could expand on this. You could maybe even expand difference, like maybe buying down that cash out refinance rate, whatever the case is, and really dive in. But this is why I love encouraging loan officers to start here. We've had a phone conversation. I will just share this, team. I've believed to my core, my opinion, I'll preface it that way. I've never, ever believed that a homeowner wakes up one day and says, you know, I need to do a loan, but I'll only do if it's 3%. See, when I say that, a lot of loan originators heard me say that rate doesn't matter. It's not what I said. What I'm pointing out here, it's not the need. It's not what's driving the borrower to do a mortgage transaction. They have a need, and I want to encourage everyone to focus on that. And then whatever the rate is for that, it is. Process equals product. Dave, you've had trust, which I love that. So I hope that makes sense. And I think you can share these links probably with any attendees, right, Dave? If they
Yeah,
want.
they're, by the way, they're already, Kathy, everybody scroll up, you'll see them. I went to, literally while I was on this call, I went to our, you know, client support page. So for everybody,
Yep.
go to Trust Engine, and I went to resources, support. I clicked on Mortgage Coach. I just put in the word HELOC, and it's smart. Oh,
There you
how
go.
to
Look at
enter
that.
a HELOC loan. What do you know? And boom. Oh, there's a video on that. Oh,
Look at
boom.
that.
Check it out. And then also remember, guys, we've got, this 10X page where every single day, if you're new to Mortgage Coach, we'll train you. Every Tuesday, I'm interviewing amazing modern mortgage advisors on how to win in this market. Every Wednesday and Thursday, it's pretty much open office. So we'll teach you and train you. You come and ask questions. And then you know what happens on Friday because you're here. We're doing a mastermind right now. So
Dave, really quick, I'm just going to throw out a comment here because I know we're going to be running out of time here soon. Here's some coaching for anybody. And Dave, I think because of the level of talent you continue to bring on these calls, the requirements for black belt just keep getting higher and higher. So I would say, from a coaching standpoint, what Tim just presented is brown belt. It's really freaking great. If you want to up level that one more, remember, as consultants, the best way to handle objections is before they're even asked. So Tim, what I would encourage you on that one is to make another column doing the HELOC and then going, between us, right? Like we know they're not going to pay the difference, but going, and now if you were like thinking that the cash out could have been doable, if you'd have been working with any other call center person and all this stuff, here's what your HELOC would look like if you took the payment difference and added it to the principal payment of the HELOC. This is how long now we'll be in this loan. Our freedom point is X, and you'll be out of this HELOC if you keep this budget in 3.7 years or whatever it is.
That's
right. Like once you tie all the objections together for a client, you're helping them help themselves get out of their way and enter into more freedom.
Yeah, I agree 100%, Sosi. And it is interesting. I will tell you that doing this for years and years and years, what I found is it's very dependent on the client. So sometimes I would do mortgage coach reports to exactly what you just said, but it was almost too much data for point one of contact. You see what I mean? It almost overwhelmed them. However, if I keep it at a very basic, because remember, I'm doing these even pre-application. I'm doing these post a phone conversation, right?
Yeah.
Based on what we talked about here. And again, everyone's got a little bit different workflow. But yeah, so you're exactly right. There's so many different financial strategies that can be added. And my reports, when I was originating loans full time, they just kept evolving. Right. So it started here and then we'd go in and update it here and then it would go over here. It just kept evolving.
So,
Great stuff, dude.
Deborah Bird, get ready to close strong. So, by the way, guys, all the videos from the Modern Mortgage Summit are now uploaded in Modern Mortgage IQ. And if like Sosi, his keynote right here, strategies for the next gen buyer, you could go and watch that, guys. And we broke it down, like it's got summaries of, all the key things that he shared during that keynote. So that's available to all of you. If you're not part of that community that's been going for 6 years strong, just go to modernmortgageiq.com. We'll put a link down below. You can get a free 10-day trial. Just click on learn more. And well, because I'm logged in, it's there, but it will give you a link to get a 10-day free trial. So you could go and check that out. All of the content, so if you go to the real estate channel and, 6 years of keynote presentations are here. And, they're all organized around the pillars of the modern mortgage advisor. Of course, if you just want to go to a specific year, like 2025, number one EXP agent in the world, talking about how he scaled his team. The number one buyer agent in America, who did over $1 billion in mortgage, did over 500 million in purchase side transactions. Shannon was amazing in terms of how to win with social. So, guys, there's a link. Go, either be in that community, at least get the 10-day free trial, take the assessment. Deborah Bird, close it out, make it actionable.
Well, and I put this earlier in the chat, and hopefully, Dave, either I'll email you some example hooks, but I basically crafted 6 different categories of video hooks. And then I gave some examples of making this a plug and play solution for people who want to turn these solutions into social stories, which is what I would say is the next layer to your, upgrading to a black belt, from taking what you do from a one-to-one and really wowing your clients and your agent partners with these solutions, is start getting great at telling these stories. And better yet, what I would prefer, and Sosi, I'll put the squeeze on you to really lead this, is for every closing you have, if you would schedule a 2-week post interview on Zoom where you're interviewing your client, and instead of you telling the wealth story, you get them and make it part of your practice of them telling their home story, because that then you can tag each other as collaborators. You can then transfer that, credibility and trust from each other's social influence. And there's nothing that sticks more than telling a story. And so one of my sayings that I've always said is, this is what gives a heartbeat behind the TCA. When you can share it on social, it creates relatability, and it allows someone to be like, oh, that's my sister. Like, my sister's going through that. I'm going to now share this with her in the DMs because this could probably help her. And that is the new referral on how to leverage social in a meaningful way. That's not always you having to be the content creator, but just showcase your clients, make them the hero of their journey, and then watch how that just grows. So that's my taking action for you guys, is don't keep this a secret. Learn about the product. If you don't have it yourself, then make sure you get with Tim, see if, you can make this part of your product stack. But if not, still be willing to learn enough about it to refer it in case this is the better solution for a client. And know that when you do that and we sell with integrity, it comes back. People will tell
All right.
other people. So that's
All right,
it.
guys, we went a minute over, so we put links to connect with Tim. You could Google them. There's links in the document that we gave you all. Give us a little reaction, in Zoom. What did you think of today's mastermind? Personally, I thought it was incredible. Sosi, you were amazing. Tim, it's been way too long. You were amazing. If
Deb,
get active, Deb,
is
well,
Deb
Deb, you're always
amazing?
amazing.
Okay,
Yeah,
thank you.
Goes-
always
Okay.
amazing.
that goes without saying. We gave you a link to get access to these keynotes in the Modern Mortgage IQ platform. You can also follow Modern Mortgage IQ on Instagram. And if you private message that, you'll, it's got an AI assistant both on the website and in Modern Mortgage IQ on Instagram, as well as First Home IQ. There's an AI assistant. So hope everybody got value. Have an incredible weekend. Take care, everybody. This is a wrap.
Thanks, everybody.